did you hear about this deal? Oh, that's a lot of money, man. Capital One plans to acquire Discover Financial Services in a $35.3 billion deal. But what does that mean for cardholders? Our friend Chase Wilsey with Wilsey Asset Management is here. Chase, good morning.
Good morning.
When you hear of a deal like this, $35 billion, and you have two major names going at this, Visa, MasterCard are sitting up here going, what is going on there? And is this deal going to pass? Explain this to me.
Yeah, so I mean, there's a lot to kind of consider here. I mean, obviously you have to look at shareholders, you have to look at the consumer end as well, what's going to happen here. I mean, the first thing I guess I want to kind of discuss is, what is the length of time it's going to take for something like this to get through?
Right.
And the first question you ask is regulatory hurdles. I mean, is this going to pass muster? And we know that this administration has been, I'm going to say, hesitant to mega mergers like this. We'll see what that kind of process looks like, because if these two companies combine, they will create the largest card issuer right now. Right. They would have about $250 billion worth of card balances. But you look at it, I'm going to say it's not that bad. They would have about 22% market share. The JP Morgan Chase has about $211 billion card balances. So it's a more diversified playing field than I think is going to create like monopolies or any issues like that. That's my personal opinion. I mean, we'll see what legally they believe. But the other issue that comes about here is the card network. You talk about Visa, MasterCard. Really the only two other major players there are Discover and American Express in the card network business. Right. But Discover only has like a 7% market share in card network, where Visa and MasterCard combined have around 70% market share. So if Capital One and Discover merge, will that make Discover's card network services more competitive and actually create a more level playing field? So there's a lot of puts and takes here from a regulation standpoint to see if this passes the muster to even allow this deal to come about. They believe maybe end of 2024, beginning of 2025 is when this deal would pass.
You mentioned, because I wanted to talk about, in terms of what it means to customers, is this competition? So is this a good thing, or is this just Capital One eating up another one of its competitors? How is it going to play out when I'm just sitting at home and I get my Discover bill and I pay that bill, Capital One steps in, how is that going to affect me? Because Discover always used to be kind of like the outsider. Hey, we're the outsider, we're trying to do things a little bit differently.
I mean, frankly, it's kind of a silly answer, but I don't think as a consumer you'll see much change.
Really?
I mean, as I said, it's going to take time, number one, for this deal to come through. Okay. All of a sudden, Capital One's credit cards aren't going to be on Discover's network. It's going to take time for that transition to occur. It could take years. And the only real difference that you might see is over the next 5 years, if this deal passes, you have a Capital One credit card, it might switch from MasterCard to Discover. The only thing you really have to consider there is, does this merchant now accept Discover? Because maybe not all merchants accept them. I think that as a consumer is the only real consideration to have. I don't think there's going to be much of a difference on the other aspects of the business. Capital One has already said we're going to keep the Discover name. So I don't think it's going to be a major change.
Still with two separate cards and two separate entities, you think? Or
I think they're going to still keep the brand, but obviously they're going to integrate kind of a lot of the back end to do some operational synergies, cost savings, things like that.
Sounds vaguely familiar. Lastly, put yourself in that boardroom, in both boardrooms, and put yourself in those meetings. Why did Capital One want Discover?
I think the card business, it's a profitable, lucrative business right now. So I think they're looking to kind of grow efficiently. We know that I think there's been a lot more banking consolidation out there. I think they saw Discover as a good asset that, kind of had a little bit of a different offering. As I said, there's only really 4 major card networks out there. I think that was the major asset that Capital One was after. I believe they said if they start this transition to actually utilizing Discover's card network, it'll create about $1.2 billion in excess revenue for them. Wow. I think that's the asset they were after.
There's a lot of money to be made out there. You mentioned the word consolidation. It seems to be happening in a lot of different industries throughout this country. Is that a good thing moving forward?
It really depends. I mean, consolidation does create synergies at times. It does sometimes create less competition. Right. I know that's one thing the federal government is going to have to weigh here is it going to be knocking out a player and really consolidating too much? Like I said, based off my initial research, I don't think so. 22% market share isn't overwhelming.
Chase Wilsey, always good to talk to you.
Good to talk to you as well.
Fascinating stuff. I mean, this is...
It's fun stuff. I saw the deal go through. I was like, wow, this is great. I was so excited when we got to talk about it today.
All right. Appreciate the time as always.
Thanks for having me.
Good to see you. Still ahead.